So now we're going to talk about investment strategies. Okay? I can't give you official advice, so whatever I'm telling you here, I want you to do your own research and do it based on your risk profile and how much you're willing to invest. Some people look at it as gambling because cryptocurrency goes up and down with huge fluctuations. So the amount that you invest should be a portion of your liquid net worth, not your total net worth. So you want to think about it like this. If you have $10,000 in separate cash and you have yourself a set amount of income like a salary and a set of expenses, look at that $10,000 as your total investment liquid net worth. From that $10,000, now you want to think about how much you're willing to gamble or risk on a high risk investment, which is cryptocurrency. There's a high reward for it, as you've noticed in 2017, the coins went from under $100 billion market cap to over $300 billion, I think $350 billion now, in 6 or 7 months. So there's a high reward, but there's obviously coins that have huge fluctuations. The good thing is, most of the altcoins, which is these, altcoins are coins that are more like prospecting, because people are looking at them for different stores of value or what they're doing differently to help the world. Those have a much bigger gamble. The good thing for is 90% of startup companies or 90% of restaurants fail because they run out of money. In cryptocurrency, these coins are very, very well funded. You've heard of ICOs where people are raising $50 million or $80 million for their coin. Well, startups don't need that. Startups usually only need a few $1 million. With cryptocurrency, the reason you've seen so many coins come out and they're still going to keep growing is because they're raising $20 million, $50 million, $100 million, and their valuations are going up and they have liquidity, so they're not running out of money. Whereas most startups, they do a $1 million or $2 million round of funding, then they're hoping and waiting for that $5 million round of funding, and they run out along the way. That doesn't really happen in the cryptocurrency space because obviously there's some exceptions to that rule, but out of the hundreds of coins that have come out, almost all of them are still live because they just don't run out of money. They are their own money, so they have a coin that's worth liquid money. And separate from that, they were able to raise a lot of money, so they have access to lots of capital. So my core investment strategy is called 40-40-20. The 40-40-20 rule looks at safety by looking at Bitcoin and Ethereum. And when I say safety, nothing is a safe investment. However, due to what we've seen in 2017, it's gone from under $1,000 to now over $10,000, so there's a big jump. So looking at past history, you can feel safe in the sense that it should continue to go up if it goes along those trends. Again, investing strategies that I'm telling you, Bitcoin could drop while I'm filming this, could drop down $2,400 and then jump back up 3,000 all in 1 hour, which is very rare for most investments. So it is very volatile. However, based on what we have seen in 2017, it has continuously gone up. Ethereum, when I first invested, was at $19 back in March. Now it's at $450. So that leaves me a big amount of, room for error to now gamble with on other coins. So that's where we're going to talk about hedging your bets. You can look at something unlike any other investment where you can say, out of my $10,000, I want to risk $2,000. Let's call it 20%. Most people would say on a high risk investment, you should only be investing 10% into any one thing. Let's say you're going to be a gambler and you're going to risk 20%. As long as you're not going to end up homeless, can't pay your bills, something like that, crypto is one of those rare situations in our lives that has never happened where you want to risk more than you're normally comfortable with or more than you would normally get suggested advice. Like normally if you're going to invest in real estate, I would say invest 10% or less in any one investment. In cryptocurrency, if you were to gamble 10 or 20%, some people are doing much more because of how much crypto's been going up. It's okay for two reasons. One, we've never seen this type of growth of any investment in the history of the world, right? This is back in the .com era where you'd see pets.com come out and have hundreds of millions of dollars, be worth billions, and then disappear. It's much less likely in this scenario because these guys are worth over 100 billion, tens of billions of dollars, billions of dollars, and these are all liquid assets. So besides the fact that they're creating something that's actually going to help fix the world and change the world and improve the world, these are also liquid. If I invest into real estate and I buy a condo or a rental property, or I buy a piece of a restaurant, I can't then just sell that or have access to that or trade that on an app or send it to my friend and get cash for it. Those are illiquid assets. They have liquidity events that can happen that take time. If I want to refinance my house, it'll still take me 30 to 60 days to get that money out. I know it's there. It's most likely safe unless there's some big bubble. And let's say there's 50 grand in there. I could have access to it, but it would take time. But if I had 50 grand in Bitcoin or Ethereum or these coins, I could have it in minutes, which is just a very rare scenario. That's why it's okay to gamble a little bit more than you're normally comfortable with. But I would never tell you to risk 100% of your money on any one thing, no matter how surefire it is. And I definitely would tell you, don't take loans to do cryptocurrency investments. And I've heard a lot of people doing that. You have to play this safe, smart, and still try to get your shot at glory, but don't go out there and put yourself in risk or debt and buying it on credit cards, because it's just too much. Don't go that far. This is not going away. Cryptocurrency is going to continue to grow, and we're just in the initial stages. If you think about it, back in March, when crypto was under 100 billion as a total, as a whole, now it's at 350 billion in 6 months. We still haven't even scratched the surface when you think about those numbers, because that's nothing compared to what it can and should be. So 40% Bitcoin is a main number that I like to use, because this is kind of your safety. You know that that Bitcoin is the big daddy. It's going to continue to grow. It's going to go out there and get more countries using it. Governments are using it. Large corporations are using it. Bitcoin is kind of the big one. That's your safety net in this investment strategy theory. Ethereum is kind of like the one that has a big upside to it, right? This one went 1,000% just this year. This one I went from, for example, in March, $19 to $450 in, what is that, 6 or 7 months. So this one has a huge upside to it. So now you have your safety net, your big upside. Ethereum, the reason I first got in was the day after they announced the Ethereum Alliance. The Ethereum Alliance is where well over 100 corporations and Fortune 500s started accepting Ethereum and using it for themselves. And so my feelings were, and I was willing to publicly say this back in March, if it's good enough, if Ethereum is good enough to be used by IBM and Ford, and their attorneys are signing off on it publicly, well, if it's good enough for their attorneys, it's good enough for me, right? Since then, hundreds more corporations have signed up, so Ethereum is here to stay as well, because there's too many large corporations using it. Altcoins is your shot at glory. Altcoins are very gambly. They have very big risk to them, except they also have a very big reward. So I like to call it a one-to-one loss strategy. So let's say you spend $2,000. Let's say that your 10 grand is your total budget. So you bought 4 grand in Bitcoin, 4 grand Ethereum, and 2 grand of the altcoins. Your loss here, when you put in 2,000, can only be down to 2,000, right? If you put in 2 grand, just like if you're gambling with blackjack or craps, if you buy in for 2,000, you lose, you can only lose this part, that 2,000. But your upside is not infinite, but your upside is much more than 1-to-1. For example, 19 to 450, 1,000 to 11,000, both in just this year. So your upside is, let's call it 10 or 20 to 1. Your downside is 1-to-1. So it's a very rare scenario where you can have such large upside and your risk is 1-to-1. If you do that with real estate, it would have to take a long form of time, right? Like your parents and your grandparents bought their house in the 1970s, and they bought the house for 150 grand. Now it's worth 700 grand. It's fantastic. They made 5-to-1 on their money. It's over the course of 20 years. These things are happening every 20 days, which is very crazy to think about. That's why there's such a risk profile, high risk profile to this. However, through all the battles and all the hardships that Bitcoin has gone through and bad press, and then the head of JP Morgan Stanley are out there saying all these bad news and saying Bitcoin's a bubble, but then secretly he was buying up, and they proved that he was buying up tons and tons of Bitcoin. And then China says, oh, we're not going to accept Bitcoin. And then they have a coin coming out and everybody came back. Bitcoin has gone through hackings and it's gone through so many things, and it just keeps fighting through it because of the overall goal and the overall purpose is it's just so much bigger than what anybody can stop. The government can't go shut down the Bitcoin offices because it doesn't exist. There's no CEO to go seize his money. There's no bank accounts to seize. There's no helicopters they can land and take and, come in with their guns and arrest everybody. There is no everybody. There's nobody to get. Nobody knows who created Bitcoin. There's a fake name named Satoshi Nakamoto. So it's very different. We're in such a unique space where the coins are bigger than any of us. It's kind of an esoteric thing to think about, but the coins are bigger than any of us. These things are helping fix, change, and improve the world at lightning speed to make things better, and they happen to be a store of value and a currency along the way, just as a secondary to what they're actually trying to do. What they're actually trying to do is make things happen faster and perfect. So Bitcoin is kind of your stable. You can change these numbers to fit your needs. If you want to just be a crazy gambler and buy a bunch of altcoins, God bless you, go for it. Just be safe and don't risk all your money on it. And cash out along the way, which is called hedging your bet, which we'll get into next. If you just want Ethereum, Ethereum was my first, well, I got into Bitcoin 4.5 years ago when I installed the very first Bitcoin ATM into a casino in America, which is a lot of politics and a lot of government officials and a lot of approving. But that was when I first got into Bitcoin 4.5 years ago. Ethereum was kind of the time where I really started studying dramatically about it, because I wanted to put out a public information about this. And before I would tell anybody publicly what to do or what to start researching, I wanted to make sure it was a good thing to do. Altcoins are my fun. This is where I like to research and find out, what are they really doing? Look at altcoins like a startup company. Look at who the founders are, look at how much funding they have, and look at what they're really trying to build if they can build it. Some of these coins are going out there and fixing the casino industry, the medical industry, the school industry, esports. They're making things faster and perfect in real time, so that if you believe in a project, if you just look at a project and say, look, I think this coin, like Sia coin or EOS or some of these coins, I think this coin, because it's going to be a better version than Dropbox, or this is going to fix the esports industry, or this is going to fix casinos, or Ripple, which they work with hundreds and hundreds of banks. Ripple is XRP. Or this one is making wire transfers cheaper and faster, because right now wire transfers are $35 on average and take 1 to 5 days from the day you send it. With Ripple, you can do bank-to-bank wire transfers in moments for much less than $35. So if people are doing these things that you just believe in esoterically, like that's what you're passionate about, that's an okay reason to invest as well. The same reason when you invest in stocks. I buy stocks like Shopify, Amazon, Facebook. Do you know why? Because I use Shopify, Amazon, and Facebook. So if I know that I use it, my friends use it, my staff uses it, why wouldn't I invest into a company like Shopify, Amazon, or Facebook when it's part of my daily life, right? So if you find coins that you believe in, Bitcoin is and will be part of everyone's daily life at some point. So if you believe in that, it's never too late, because every single month this thing keeps going up, and people say, oh man, Bitcoin's $2,000, is it too late? I missed out. Oh shit, it's $4,000, what do I do? It's too late. Oh man, it's $6,000 2 days later. Every time they say it's too late, it just keeps growing, right? A month ago, we're just researching it right now, like an hour ago. A month ago, Bitcoin was at $8,000, and right now it's over $11,000. So you just never have had those scenarios. When it was at 8,000, people were like, oh my God, what if it hits 10 grand by New Year's? It hit 10 grand in November. It's just, it's hard to explain, because it's just never happened in the history of the world. And because there's a finite amount of Bitcoin, at some point this number will run out. They're going to stop mining Bitcoin. Once they stop mining it, it's just supply and demand. If all the billionaires and zillionaires and guys in Saudi Arabia and China and Macau want to start buying up Bitcoin, or hedge fund managers, those guys need to buy tens of millions or hundreds of millions just to get the feeling, right? Just to get that excitement. So if there's no Bitcoin to be sold, or 30 million people have $1,000 each and they just don't want to sell it, that naturally causes the price to go up, just like in the stock market. All right, so hedging your bet. What hedging your bet is, it's taking money off the top. So let's say you invest into a coin, and you're going to put in your $10,000, right? You put in $4,000 to Bitcoin, $4,000 to Ethereum, and your $2,000 into the altcoins. By splitting that up, if any of those coins get to double in value, you can remove your initial bet off the table. It's kind of like when you're playing blackjack. If you if you gambled with $10,000 in blackjack, and you're making bets, and now you're at $20,000 stack, you can remove your initial $10,000 and be free rolling the rest, or you can walk away from the table and take the money out. It's a very rare scenario that you can actually have something that's going to hopefully double in value. But because it's been doing that all year long, it's something you should actually be thinking about, is taking some of the interest along the way. If you're investing a small amount, and you want to gamble, that's fine. So if you have 10 grand, you invested $1,000 into one of these altcoins, and it goes up to 2 grand, if that $1,000 is not what you're there for, and you just want to have your shot at glory, then you can let it ride. If you want to play it safe, you can remove that $1,000 and either place it one of these places, or just keep the $1,000 back into your bank account and just continuously play it safe in that sense. Okay? So hedging your bet can be any number. You can be taking out 20 to 30% along the way, or you can wait till it full doubles, hopefully it does full double, and remove the entire amount. And that way you're just free rolling the rest. Okay? Hedging your bet is something that you should be doing if you're investing too much. So if you have a $10,000 liquid net worth and you're investing 4 or 5 grand, that's too much. So you should be taking money out along the way. If you're only investing 1,000 to 2,000 out of your 10,000, then it's okay to gamble a little bit because the upside is so high, but you getting back at your initial $1,000 is not going to change anything for you. If it matters to you and you're investing too much, then you should definitely be taking money out along the way. So hedging your bet. The next thing is called the risk profile. The risk profile is figuring out how much of your liquid net worth you should be investing into cryptocurrency because it's so volatile. Risk profile is based on your age and your demographic and your income. So if you're young, if you're 24 years old, or you're 34 years old, or you're 42 years old, even if you're in your 50s, you're still young. You still have half your life ahead of you. You just have to determine what would happen if you lost it all. Okay? If we wake up tomorrow morning and Bitcoin was 40 bucks or 40,000, neither would surprise me. So you can't look at this as something that's just so simple and it's like consistently growing like real estate. However, you saw what happened throughout 2017 with the consistent growth going from 1,000 to 2,000 to 4,000, 6, 8, 10, now 11 or 12,000. If your risk profile is you're 24 years old, you make 3,500 bucks a month, your overhead is 2 grand a month, and you're able to set aside 800 bucks a month and a little bit for taxes, you know that your 800 bucks a month net is going to be 10 grand by the end of the year that you set aside. You should not be investing $10,000 into one thing, right? However, if you're 47 years old, you've already saved up a bunch of money, you have your house paid off, and you have investment properties, and you want to put in 200 grand into something, your risk profile and your liquid net worth aspect is much different, because if you lost it and you have income and rental properties and other things going on in your life, then you're not going to get hurt. What you don't want to do is do something that's going to hurt you financially by doing this, but you want to do enough that matters if you're right. And if you're right, Bitcoin, Ethereum, and some of these altcoins are going to continue to go up, and some are going to continue to go up at a rapid scale. So you just want to look at what number would hurt if I woke up in the morning and it was gone, or what number would be frustrating me if I didn't have access to it. The good thing is, if you're doing Bitcoin, Ethereum, you always have immediate access, and with altcoins, you can always switch your altcoins to Bitcoin using Poloniex or Bittrex or some of the main platforms. So it's a little bit different investment because unlike real estate and some of these other things that you should or could be investing in, you can't just transfer your the money that you have in your real estate. You can just transfer your liquidity out. It would take you 30 to 60 days to refinance something. With the coins, you can remove your money pretty quickly depending on which platforms you're using. So my normal suggestion is 10% of your liquid net worth is something you should be gambling with or could be gambling with. If you have a solid income you've been with your job for more than a year or two, and you have other ways of making money, it's okay to start getting into that 20 to 25%. Anything above that, you're gambling, okay? I do a higher amount because I truly believe in it, and I have other revenue streams. So if I'm wrong, or if something happens, or if we go into a big war, or something happens and coins drop or they go up high, it's not going to affect my daily life. I just do a bigger percentage because I truly believe in what it is, and I think it's one of our rarest moments in history. Next thing we're going to go to is holding versus trading. So trading is very complicated. Trading involves, I would rather you have an expert help you with trading, because when you look at Poloniex, Bittrex, Bitfinance, Bitfinex, and some GDAX and some of these platforms, it looks like you're on the stock market and things are happening in real time and very fast. And other platforms are at different prices, which is also rare. Most of the times if you're looking at stocks, if it's 46 bucks on Charles Schwab, it's 46 bucks on E-Trade or the other platforms. with Bitcoin and Ethereum, with GDAX and these other platforms, it could be 46 bucks here and $51 here, and there's an arbitrage situation that happens. That type of trading is much more complicated, and you're looking at buying the dips, having sell orders in place. Like, you would have to be really technically involved in this. There is definitely money to be made in day trading. You just want to really get into studying this properly, because just like day trading in stocks, most people lose their money because they don't know how to do it. With this one, there is such big swings that day trading is profitable. You know, every time Bitcoin went to 10 grand, it went back down to 9,200, and then jumped up to 10.5 or 11, and then dropped down to 9,400, and then 3 days later back over 10 grand. So because there's those swings, if you know what you're doing, you set good prices and say, okay, Ethereum's a good example. When it was at 300 for like 3 months straight, where it just kind of fluctuated to 320 and down to 250 and then back to 300, and just kind of kept going. Well, if you believe in Ethereum that's going to get to 400 or 500 like it did, every time it got to 300, you could sell, hoping or banking on the fact that it would go back down to 250 or 260. So if you buy every time it goes down to 250 and you sell every time it goes to 300, there's a way for you to be making consistent money and not really having much risk in that by just buying those big dips. If you're going to be trying to do full-on day trading where it goes from 300 to 292 and then back to 300, and you're just going to try to do those, you have to really be aware of your fees and your access to money. Also, you have to be worried about your goals. If your goal is to eke out a profit and you're going to say, okay, I'm going to have 10 grand in my account and I'm going to day trade Bitcoin and Ethereum, and I'm just going to trade on the swings. You have to make sure, one, that you're right, and two, that you're not over leveraging yourself and putting it all into a certain coin just on the swing, because people keep looking at patterns, and some of the patterns on Bitcoin and Ethereum are not a pattern, because nothing in history has ever gone up 2,000% in 6 months and 1,000% in 8 months. It just doesn't happen like that. So you have to be prepared for those type of swings. So I would never suggest for you to do margin trading or to borrow money on doing this type of trading. I would suggest looking for the fees. Coinbase.com is by far the highest fees. It's just one of your safer platforms for the main 3 coins. GDAX and Bittrex are going to be your best ones, and Poloniex are going to be your best ones to do your day trading if you're going to do it. I'm mostly into holding. I look at the coins that I like, the half a dozen coins that I'm passionate about, and I'm passionate about the long-term things that they're going to do. I hold those. If there's ever a big dip, I buy more. And I'm just cost averaging. Some of them I got in so early that I'm actually sometimes cost averaging up because I bought in much less than it is now. And Ethereum, obviously, Ethereum I got in at 19 bucks, for example. I still believe in Ethereum long term, so when I see it go from 450 to 360, I would still buy more just to keep buying into it. You just have to look at what your goals are. If your goal is to make 300 bucks a day trading coins, do that. If your goal is to buy into a coin at 300 bucks and hope it gets to 1,000 bucks, do that as well. Just decide if along the way you want to remove some of that money to be safe, or if you just want to take your shot at glory and hold on for the ride, just be aware that it's going to keep growing. And you have to just determine whatever your goal is to stick with it. If you buy a coin at 300 bucks and it gets to 600 bucks and you want to remove your 300, if you say that's what you're going to do it. The problem is some people are just like gamblers in a casino. They go to a casino and they bring 300 bucks to play blackjack. They get to 600 and they end up losing all that money plus 1,000 because they got to that 600, so they tasted victory. That's why casinos were built. Don't do that here. If you say, I'm going to buy them for 300 bucks, when I get to 600, whether you're playing blackjack or playing with Bitcoin, if you're going to get to that number, stick to that and say, okay, I'm removing my initial 300 bucks and I'm going to free roll the next 300 bucks, and that's going to be your upside. If you invested a small amount and that 300 bucks is not going to affect your life and it gets to 600, just stick with it. Whether it drops to 400 or goes up to 1,000, just stick with it through the roller coasters so that you're not going to do what a lot of people do in Vegas. This is not Vegas. Even though it's a high-risk investment, you're not doing this to gamble. You're doing this to make money and hopefully buy into something for the long-term future. All right, the last couple things are access to money. We kind of touched on it a little bit, but Bitcoin and Ethereum are one of the few investments in the world that you actually still have access to your money. Like we talked about in the previous video, just make sure that you have it on different platforms that have access like Coinbase. Square is going to have the card. Obviously, BitPay that we went over, BitPay has a card. Bread has a wallet that you can have access to it. So you can store your Bitcoin on some of these wallets so that if you ever need it, you have access to it. If you're investing an amount that's more than you need, like if you're investing 20 or 30,000, that's your investment money. That's not money you should be spending. That should be an amount that's just set aside specifically for investing. But if you want to have access to it, set yourself up with a BitPay card or a Bread wallet or things like that, just so you have access to your money. The last one are two funny words that you're going to hear about when you're looking into, if you get into the crypto group chats. There's crypto group chats on Telegram and on Facebook. The ones that we have, if you guys want to join, is called Crypto Never Sleeps. Crypto Never Sleeps is the one on Telegram and the one on Facebook. There's hundreds of members here and thousands of members on the other one. There's no cost to it. But if you want to be in there chatting, just look up Crypto Never Sleeps, and there's other good ones like that. What Lambo and Moon is just a kind of an inside joke that became famous in the space. Lambo is for all these people that are having huge aspirations for what these coins are going to be worth. Because whenever a coin goes up, they say it's mooning, or when can I buy a Lambo? Okay? You're going to hear kids talk about this, or you're going to hear adults talk about this a lot in the group chats. It's a mentality. And the mentality is that people think they're going to buy something for $100 and sell it for 20 grand. Most people are never going to do that. Most people are never going to get to the moon because they're going to sell it along the way. So you have to determine how much you're investing to see if you're ever going to get to these two things. What I mean by that is, if I sold you Bitcoin for $1,000 and it skyrockets up to $10,000, would you have sold it along the way while it's mooning, okay? Or would you sell it when it got to 3 grand and buy a Lambo? That's the theory. Some people are doing it to make 2x or 3x, which is an absolutely amazing return. Other people are looking for it to moon. And the moon part is, if you bought it for 1,000 and you stuck with it till 10,000, that's making money. So many people talk about the stories of somebody buying 2 pizzas for 10,000 Bitcoin, and that's worth hundreds of millions of dollars, right? But it's not worth hundreds of millions of dollars because most likely that person would have sold way back when 10,000 Bitcoins was worth 30 grand or 50 grand or 100 grand or 2 grand or $2 million. They would have sold along the way. It's very unlikely somebody with 10,000 Bitcoin for 2 pizzas would have held on for it to be worth $100 bazillion. It's just not real life, okay? How you can make it real life is determining in your investment strategy, would you sell along the way? And if you're going to, make sure you stick to your goal on that, or buy an amount that you don't care about that's not going to affect your life and wait for the moon. Thank you.